Good morning, everyone. You're all very well, and you're all very welcome to Monday's market preview for the week ahead. So today, obviously marks the funeral arrangements for the Queen in the UK. So obviously, as a result, the UK trading session is having an unofficial bank holiday today, on this occasion. And of course, we are seeing a very, very quiet London Open this morning and trading session, broadly speaking, off the back of that. Now, overnight, news geographical, I suppose, news did a break regarding typhoons and earthquakes in Asia, with many million people being evacuated in Japan and, of course, Taiwan as well, having 7.7 earthquake. So as a result, I'm sure people have probably seen the videos circulating of obviously the wild weather conditions that's currently been witnessed over there. And we have seen obviously a quieter Asian session off the back of that as well. So overall, a very, very muted in terms of trading volume start to the week. Markets have been fairly quiet overall. Now, again, we have seen the indices kind of slide lower from last week. We saw it right through from last Tuesday into the weekly close. We saw the indices kind of grind lower steadily, and we are seeing the indices kind of grind lower. So albeit volume and volatility is reduced, we are still seeing the markets kind of churn lower very, very gradually. And we'll look at that now in a moment on some of the assets. So I suppose from our perspective as traders, as market participants, all eyes is really directed towards Wednesday in terms of the next Federal Open Market Committee meeting. Now, of course, last week with the higher than expected inflation figure, market institutions, investment banks and institutions like your Goldman Sachs, etc., have all been raising expectations on the interest rates, and it's now 80% likely that the Fed will increase rates by 75 basis points, or 0.75% on Wednesday. 25 or 20% or so of market participants are maybe pricing in a chance of a 1 whole percentage increase. But the general consensus at this moment in time is for another 75 BPS increase. So again, we have to be kind of aware of that. Now, I will be looking at the markets on Wednesday, specifically towards the FOMC. So we'll be covering that in detail. So today's video is kind of more a preview to the week ahead in terms of volatility, a quick look at the economic calendar in terms of today and tomorrow, and of course then kind of looking at some of the prices after last weekend's close, the bank holiday obviously in the UK today, and of course looking at that in detail as well. So if we look at the economic calendar, we can see broadly not too much out today. We had PPIs in Europe this morning. We have Canadian figures out this afternoon with bill auctions. So the Treasury bill auctions are on today in the US, and we do have the bond auctions tomorrow. So the bond auctions and the Treasury auctions are taking place today and tomorrow in the US as well, ahead of Wednesday's FOMC meeting. Other than that, really not too much kind of happening today. Broadly speaking, we do have PPI figures in Germany tomorrow. We do have CPI figures in Canada tomorrow, and we do have some building and house starts for the US. So this, traditionally speaking, anything relating to new home sales prices or housing starts or housing builds is generally a leading indicator. So different analysts have been kind of noticing that new home sales since the highs of 2020 has actually decreased by 60% in the last 2 years or so. Again, leading indicator to say that not many people are getting approved for mortgages, and the prices of property due to higher material costs and inflation costs is obviously factored in. So we're getting a real cut in the demand side of the markets, where we're not really seeing the bills become as high or as often as market participants would like. As a result, those house prices have obviously increased rapidly, but we are seeing those abating in house prices as material costs and energy costs has kind of move lower in the last 2-3 months, or specifically. So that'll be worth keeping an eye on tomorrow, just to kind of give some rationality there And of course, we do have some oil numbers as well. So the weekly crude oil numbers and imports and stuff like that, heating oil, is coming out tomorrow in the US. So that will be interesting to watch, particularly for WTI, the West Texas oil instrument as well, for those who are obviously trading commodities. Now, again, as we said, Wednesday, obviously we have the FOMC, and I'm going to focus that more specifically on Wednesday morning. So we'll be doing a video early Wednesday. We'll get it out early, nice and early, and we'll obviously be previewing the FOMC. So I'll be looking at the FOMC in its own right, specifically on Wednesday. Other than that, then we kind of bring into the Bank of England Thursday. So that rearranged meeting that was meant to take place last week is now obviously going to be next Thursday. And of course, then we will have a number of other data prints through the US on Thursday and Friday as well, which we'll be looking at later in the week as well. So broadly speaking, not really much happening to start the week. Market participants are really much gauging and getting ready for FOMC on Wednesday. We know that's going to be the biggest market mover this week. So it's all about knowing when these fundamental events are on, and of course being able to understand a little bit of a backdrop about it, rather than just exclusively trading the price action. I always think the more information traders have, the more of an understanding they have, the more informed decisions they can make, and the better the results will be. So that's obviously the goal of these videos. So of course, then if we move and migrate back to the charts, back to the price action, just kind of looking at the DXY dollar first and foremost, we're seeing that dollar continue to remain fairly range bound around this 110 level. We have a short-term area of liquidity here around 110. And market participation, again ahead of Wednesday, is very much muted at this level. So this was last Tuesday's move off the back of the CPI number, and of course since then the dollar has been fairly consolidated, fairly sideways moving, albeit even though the indices are moving slightly lower. So it's important to look at kind of the cycle and where we are within these trends as well. But at this moment in time, all action and all eyes is really focused on the DXY around this 110 level. Of course, if we see that dollar breakout, you're really realistically looking to see kind of take out those highs and continue on its upward moving trend. And of course, that would be the kind of the favored bias, particularly by risk off sentiment, by those who are looking to get out of those riskier asset classes into your safe havens ahead of Wednesday's meeting. So all eyes on that really, I think, is going to be important into Wednesday, as we said. Looking at the euro dollar, that's been reciprocated. So the price action over the last 4 or 5 days ago since last Tuesday has been very much muted around this $99.1 level, this parity level that has been talked about for quite a number of weeks and months now. We are seeing market participation continue to grind, and a real battle has continued to take place around this region. Okay, now if you were to look at the higher time frames, you would see bearish order flow, new lows, new order flow to the downside continuously, which is showing that at this moment in time, the euro dollar is obviously still bearish. But given that we've seen a lot of cyclical consolidation over the last, I suppose, 12 weeks, 10 weeks or so, shows that maybe there's a little bit of a changing dynamic, particularly speaking as the ECB is becoming a little bit more aggressive in its interest rate policy in terms of increasing the interest rates. We're starting to see that now being fed through the European markets. So of course, is this going to start the bottom of a consolidation? So we know, broadly speaking, 75-80% of the time, normally speaking, markets are in consolidation. The remaining 20%, they're either trending up or down, and that's the way the markets generally move. So at this moment in time, it just really becomes a case of how did these markets react around this region to kind of give us a clearer consensus. Now, as I said, the last 4 or 5 days or so, we've been very muted, very much kind of consolidated around this region. So we're looking kind of towards Wednesday to see if there's any sort of shift in sentiment that will make market participants become alive again before we start to see that uptick in volume, before we see those trend direction moves that we tend to look for and tend to like as well. All right, so that's pretty much kind of where we are on euro dollar. If we move into gold, so gold obviously got that massive break through this daily and weekly level around 1680, 1700. So we've finally got that weekly break through this region here. Very, very strong short-term bottom here was effectively broken last week. We did get a little bit of a dead cat bounce recovery, but we are starting to see the selling coming in again. Now, does that mean that we're going to get a continued sell-off? Well, let's just wait and see, because we're still very, very wicky in this region. If you go back to as far back as 8 April 2020, we have seen gold weekly wicks come as low as kind of the 1660s, 1650s. And we saw that again last week. We saw that wick, we saw that little bit of a bounce. So it's just wait and see. Okay, we've seen how choppy, how volatile the oil markets have been, and particularly off the back of that selling since May, with the commodity prices starting to roll over, with the oil prices starting to roll over, and of course the broader commodities as well. We're starting to see that being factored in with the likes of natural gas, crude oil, gold, silver. They're all starting to show relative declines in the last kind of 8, 10, 12 weeks or so. And that's still continues to play out. Now, last week, very, very strong weekly breakout of this consolidation. If we just focus on this region, and of course this region here, you can see that very, very strong break. So now it becomes a case of, is there any sort of short-term recovery back into this region, or are we going to continue declining, continue selling off back into the 1600s accordingly? Now, when I look at the daily, I can see very, very clearly, obviously this structured area of price action. We can see that kind of very gradual kind of dead cat bounce recovery on the daily. And then obviously last week we got that daily break. So we got that daily break, a little bit of a recovery on Friday. But today's price action very much testing these lows. So that obviously brings us to the 4 hour. If we're looking at the 4 hour charts, well, we can see very, very clearly break of this structure is clear. And we hung around for a little bit, and then obviously we continued breaking down. Very, very modest recovery back into testing these lows. And we are seeing a little bit of a short-term bottom coming in here in the 4 hour. So there's a counter trend bottom developing here. But obviously, look, it's up to the trader in question. Your kind of your trading style, your plan. Do you trade counter trend movements? If you do, well, this could be valid to you. But I suppose from a market analytics research perspective, we can see a clear bottom emerging here short term. And now it's a case of, will we get that modest recovery? Will we get that dead cat bounce, kind of short term retracement back into this region to undo this imbalance, this smart money imbalance, liquidity breakout move down into this move? And then, of course, that brings us back into some of these order block levels. Okay, if you're looking at order block levels, you're probably focused on this area here accordingly. And if we see a little bit more of aggressive swing in the movement in the next couple of days or so, we're probably focused on this region up here. So this region here around kind of 1700, 1705 is the first level of interest. The second region then becomes the level up here around 1722. But of course, if you trade simple supply and demand, support and resistance, your price action levels, you'll see there very, very clearly as well. There's also a short-term bottom here. So we kind of have our kind of intermediate levels, all about observing the price action as it retraces, as it kind of gets those linear retracements, those mean reversion movements. And then obviously we're able to kind of see a little bit more into it accordingly. All right, so that's kind of what we're looking at there in gold. Of course, for anyone, it's just a course of having that trading plan, having those entry confirmations that you tend to look for within your style or within your strategy, and then obviously being able to execute and manage those trades accordingly within the risk profiles as well that you have. So that brings us then into the indices. So the indices then, as we said last week, that daily retrace into that order block area, that price action level around 41.50 was very, very clean. Watching for that break of the lows, which has taken place, albeit it didn't quite be as clean as you would have liked, because we got that very, very sharp wick on Friday, but markets are continuing to sell off this morning, and we are coming into that 3750, 3800 level we talked about last week in relevance. So on the 4 hour, again, the 4 hour structure has broken through the lows. We've come back up to retest the previous low here. So if I just drag this across, you can kind of see that there very, very clearly. We've rejected around the 38.85s, and we've continued to kind of sell off in the pre-markets this morning ahead of the cash open today in New York. So markets still very, very much bearish, and even in the last hour or so, again, we're still seeing that red bearish impulses, and now we're trying to take out this short-term bottom here at around 38.35. So if we're breaking that would bring down the 276, 3800, 3750s into check, which we mentioned and talked about last week, and kind of affirmed that approach in the markets. Nasdaq, very, very similar. So Nasdaq again, daily retrace last week into the order kind of area of interest around 12.8, 12.850, clear rejection into those short-term lows. Of course, Thursday broke through. Friday, we got that wick, that kind of dead cat bounce recovery. And of course, this morning on the Nasdaq, markets are following up with a second wave of equal selling. And it looks very much likely that we're going to try and grind this lower back into these local lows down here around 11.450, 11.5. So that's been kind of the area that I've been looking at. Myself personally speaking, but of course, let's just wait and see, because the order flow is giving us very, very clear signals at the minute that these markets are selling off. We sold off last Tuesday. We're selling off Wednesday and Thursday into the weekly close. And of course, today we are continuing to sell off. By the sounds of it, it looks very much like markets trying to price in another very, very hawkish meeting on Wednesday. So generally speaking, these institutions won't just initially hit the sell button on Wednesday evening as the news comes out, because they will be forecasting, they will be analyzing markets, doing their research, economical research, and obviously financial data, looking at that. And for them to get into the markets cleanly, they're going to be selling and forecasting and pricing moves in ahead of time. That's how bigger institutions get their orders filled, get their moves into the markets. They're not just going to hit at 7 o'clock on Wednesday and they're going to hit a heavy bat of selling. Yes, algos will be involved, but to a lesser degree, markets have been pricing this in ahead of time. And we can kind of see that coming in. The sentiment is still very much bearish and indices are still moving lower, broadly speaking, with that in hand. Now, again, nothing's really changed here in the Dow Jones, even the FTSE, the DAX, the Euro Stoxx, 4 very, very similar asset class. So all these 6, even though we've got Europe, we've got the UK, and we've got the US, all moving in tandem. They're all moving together because they're all collective basket of risk-orientated assets. Risk-orientated assets, when the market movements are negative and the sentiment is bearish, you will continue to see them all slide together. Now, some of them will move lower at different speeds because of obviously the volatility within certain markets. But broadly speaking, all 6 are moving bearish together. Okay, if you went to the ASX or the Nikkei or the Hang Seng, they would all be giving probably similar signals as well, just for those who trade maybe different markets as well. So the Dow Jones, as we said, we got that daily wick rejection last week. Markets again today following that up with another bearish move. Friday was quite bullish, actually, considering that we had this massive tail and of course that bullish close. But of course, markets today on the 4-hour and the daily obviously giving us those reruns into those lows, and we are fulfilling those order blocks here at 30,500. So this order block is almost met. Would it be surprised to see us maybe even go lower? We've got another area down here, obviously at this region here around 30,000. But broadly speaking, if you went up to the weekly, you would also see this level here at 29.5. Okay, so 29.5 was the pre-COVID highs before we had that flash crash in 2020, excuse me, and then where we had that area of interest when the price action obviously broke through, sustained above it, and continued this bullish trend into the end of 2021. So structurally speaking, still very, very corrective, still very, very bearish. And at this moment in time, I think it would be risky to be looking at buying here, given how bearish and negative the markets have been at this moment in time. Now, of course, it's up to you as traders. You're the ones making these decisions, but it's just all about maybe looking at these markets with as much, I suppose, perspective as possible to give yourself a clearer understanding of what's actually happening. So that's pretty much where we are on the Dow Jones, and of course, similar scenario on the FTSE. The short-term order flow that we talked about here. So I actually looked at selling from the 73. We had that bearish order flow, lower lows, price action corrects again into this order block area here. Smart money move, very, very clear. It was more kind of clean and pronounced here. On the 1 hour, we have this area of interest here, the wicks, rejection of zone, and of course on the 4 hour as well, you're seeing that again playing out. This is where the sell-off emerged from. We got that recovery, and now the price actions continue to trend lower. So today, markets have broken lower. We have made that fib extension here, but would it be surprising to see the markets maybe move into this 7150, 7200 level ahead of Wednesday? At this moment in time, probably not. So we're still in that corrective bearish trend moving with that bearish order flow still continuing to play out. Higher time frames. Again, this 7150, 72 is a nice short-term level here. 71.75 being the order block area on the daily, which got that got that very nice recovery on the 1st of September. But again, broadly speaking, we do have another area here down around 7,000 as well. So if we're breaking through this, closing underneath, you're probably going to see further selling back into these lows as well. And all that is simple price action. That's just how it is. And of course, finish off this morning with Europe. We're seeing the DAX continue to slide back into these lows. Order block level here at 12.6 has almost been met, particularly from the short-term perspective. But if you dial up as well, particularly to the daily, we're seeing the DAX kind of come back into this area of interest. And we talked about last week, could the price action maybe navigate a daily closure through this 12.5? If we're breaking through 12.5, then this is a new continuated cycle in DAX selling. the bearish order flow continues to play out into this kind of obtrusive, kind of condensed structure of price action. I suppose if you're traditional, you would kind of look at it like that, kind of triangular structure per se. But broadly speaking, markets are still very much obviously tilted to the downside. We're seeing it across the board in Europe, in the US, and obviously in the UK as well. And similar again with the Euro Stoxx, very much bearish off that initial recovery. Daily order block rejection here at 36.50, a little bit of a wick higher, very, very clear bearish engulfing. And since then, the price action has continued to move lower on the structured price action here on the visibility within these charts. So price action, very, very key and very, very important at the minute. And of course, markets continue to decline and push lower back into these lows as well. So that's where we are for this week. Kind of starting out, of course, we'll be focused and we will be back on Wednesday for the FOMC. And of course, tomorrow, if there's any sort of movement ahead of the markets, particularly in the dollar, we'll come back and do a second video more exclusively on the dollar pairs as well for those who trade FX markets. All right, that's pretty much it, everyone. We'll see you all Wednesday for the FOMC run through as well, which will be a little bit more detailed in terms of the fundamentals as well. Thanks, everyone.